Alright guys, so here we have S&P 500 open up way higher, hitting the target that I told you guys we were gonna either open at. Yeah, I said we're gonna open hitting this target right here, or most likely somewhere in between. I said if no deal happened, we were gonna either close same area, maybe a little bit before, but if we had good news, we were gonna open this target right here. You can see how stuck in highs getting up to it. It's not your typical open high, especially with the gap. Normally these caps have to be closed, so I wouldn't be surprised if either later on throughout the night the market starts going down, testing those prices, and as the market then recovers, or as we get to morning time around 4 or 5 o'clock, the market then start recovering back up again. And as other data opens up, we're gonna probably push up a higher, but at some point we'll come down and test these prices right here. It could be probably Tuesday data. Tuesday data will come up and bring it down here, but as we get to Wednesday, when the big news and the big shit's gonna start happening, it'll bring the market back up again. It'll be testing this all-time high region again. It'll start forming some sort of U pattern or whatnot. And then by the end of the week, by the end of this week, we could see Nasdaq either hitting these prices right here, which is 6,443 and 6,445. I wouldn't be surprised if we already opened like this with this news. Now imagine with earnings and Powell, we all know what he's gonna say. He's not gonna cut interest rates, so I wouldn't be surprised again if with that news the market either just reacts neutral, or again we go down these regions. But then you also got earnings, so on Thursday, so that also might bring the market, not might, but it will bring the market back up again. Depends where it's at that certain time. So let me break this down to you guys how this whole you know tariff thing's gonna happen, because there's a big week we have coming up. Alright, so two huge fucking trades happen. First you got United States and Europe. They just made a it's a big deal. So instead of a 30% tariff Trump was threatening with, which would have been absolutely brutal for markets, they settled for 50%. That's still higher than before, but way better than what they're facing. Plus, Europe promising to buy $750 billion in U.S. energy. What that means is that money is most likely gonna go to these new startup big energy stocks that Trump is somehow related to. I guarantee you that. Um, what else? What else? What else? For the U.S. energy, and invest 60 billion, 600 billion here. So 750 billion in U.S. energy and invest 600 billion here. Now, when they say invest in stocks, invest in what? Curious about that. Um, so that's massive money flowing in into the United States market. So that's why when I was seeing this over here, especially way down here in this region, is like, yo, we're about to blow up. Especially how they caused this move right here. That's a whole strategy. It was a strategy move. It's a discount. All these people here that were holding S&P or certain stocks, they sold, they panic. Investors, hedge funds, whatever you want to call it, came in, bought up like crazy, and then now we're gonna blow up. Um, so anyway, let me go back to the 1 hour candle. All right, so the second one is United States and China. They're extending their talking period. It was supposed to end this first, but they said, hey yo, since we can't agree on anything pretty much right now, let's extend it more. That way, your people, my people, don't stress out. That's pretty much what that was. Um, so they're extending their days for 9 more days. It's huge because we will potentially looking at escalating tensions. Um, we were potentially looking for we were looking at a escalating tension. Now we're better now. We're less stressed. We don't gotta worry about that. Is China gonna come in agreement? We got 2 or 3 days left, type of shit. You want to get away from that. You want to get away, especially since you've been getting bashed on social media for other things. You gotta make it look good. So you gotta do whatever it takes to get this shit over with, right? And don't worry about, hey, look, I took care of that. You guys, the market's open higher. It looks better for him. You can then brag about something to brag about, and instead of getting pummeled over for about certain questions, certain topics. Next, let's talk about the S&P 500. Now, looking at the S&P 500, it's on fire, you guys. For the last 5 days, we've been fucking probably hitting the same fucking price targets. Then with this little hint of, hey, I'm gonna have a talk with Europe, and you see this breakout happening right here, especially around your your sweet spot right here, your 8, 9 in the morning. So the market closed at 10. I went in right here, and then expecting him to do this, to say, hey, you guys, I took care of it. So imagine, guys, when it's gonna come down, and again, when earnings comes and all this shit, it's gonna push it up, it's gonna shoot like crazy. So here's what I'm watching for today. As the gap open, probably, yeah, uh, 0.5 to 1% minimum, and that's what we're seeing right now. Your key resistance is gonna be this area right here. You can clearly see how there's a certain resistance right there. And it just so happens that this indicator, this Fibonacci, is pointing to that perfect spot. It's crazy how this shit works, yo. Alright, so now if we break this, we're most likely gonna end up hitting some sort of little resistance in here and then come back down at nighttime. If we keep, okay, so look, so we close the forward candle at, so see, you close at 2, then we go, the next one's at 6 to 10. So we're gonna take a look at 10 o'clock, because this forward candle here is telling me, so if anything, we're gonna come up here, maybe touch this, come back down by 10 o'clock and start going down. If not, we're gonna keep just hitting this area over here, especially if we're still here by 10 o'clock or below this, because first you want your forward candles to start closing. That way, because it's a new, just imagine it's like think of it as a drawing, like a black screen in the back or white screen, however the fuck you want to look at it. And you're drawing a house or you're drawing something. You gotta draw the foundation, right? You gotta draw like. So that's what these forward candles do. Just imagine these forward candles are letting you know, like, hey, on this new turf, just imagine if you're walking there and you hit these invisible walls. That's what the market is doing. The market is going up, and as it goes up, it hits these fucking walls. Like, what the fuck? And it keeps hitting over and over and over until they can't pass it, and they'll be like, oh, there's a resistance right here. And it'll go down, and as it goes down again, now, when it goes down, it's the opposite. It also fucking, they start hitting certain walls along the way. It's like, oh, there's another fucking wall right here. So they start bouncing up and down in these fucking walls. They start discovering in this fucking blank space. And they start marking them down. Every 4 hour candle is like, okay, this one right here, this one right here. Then you start marking it, boxing it up. Anyways, yeah, you start doing your editing to it, because now you know where certain resistance, certain support are at, especially when you have 4 hour candles closing it. What else? Go. So yeah, let's take a look at this at 10 o'clock. I believe it's 10 o'clock. Yeah, 10 o'clock, 10 to 1. No. It's 10 to 2. Yeah, 10 to 2. So we'll take a look at it at 10, because the next sweet area to look at is going to be your 11:45 to 12:30. That's when the market then starts correcting and actually going for a move. But since it's a new area, even though it goes up at, let's say, at 12:30, at 2 o'clock or 1 o'clock, it could hit a certain resistance, come back down and close down here at 2 again, and then start going down. Which is a thing that could happen. So look, this is how these tariffs are now going to affect Apple, because you gotta remember we got Apple, Meta, Amazon, and Google coming out with their earnings this weekend. So this is how they're gonna how these tariffs are gonna benefit these stocks in a certain way. First, you got Apple. This is probably the biggest winner today. Most of their stuff is made in China, so the trade truce saved their billions in potential tariffs. I'm looking for Apple to gap up 3 to 5% today. So what I'm saying is, as the market opens, you're gonna be able to see them at 1 in the morning Arizona time. That's when the markets or these markets quote unquote open, not open but active, and you should see a gap just like you see right here. But you should see a bigger gap, or well, 3 to 5%. That's gonna be a fucking big ass gap. But now imagine that's just from the good news of this tariffs. Now imagine what the earnings comes up. But remember that these gaps also tend to be closed. So at some point the market will come down, complete it at the closing, making it close, and then go back up again. Um, if earnings are good Wednesday, this could run new highs. The next one is Microsoft. Cloud business benefits huge from better Europe relations, less regulatory risk, easier expansion. Microsoft should open strong. Next, we got Amazon. Double benefit here because Europe helps their international business. China truce helps their supply chain. As well, also benefits from better trade relationships. Tesla, also a good thing because Tesla benefit from Europe deal since they export cars to Europe, lower trade tensions mean less risk for retaliatory tariffs on U.S. cars. Um, the key this week is earnings. Good trade news plus good earnings. Psh, blast off. Let's go now to crypto and connect this together. Because I know half of you are here are for pretty much for Bitcoin and Ethereum. People or in other coins, but what you really gotta pay attention to is crypto and Ethereum. Those are the indicators tell you where your meme coins, your altcoins are gonna start heading to. When traditional markets are uncertain, money flows to crypto as an alternative. When traditional markets are doing well and uncertain decreases, money can flow out of crypto back into stocks. But here's a twist: better global trade relationships actually helps crypto long term because more global economic stability, less need for capital control. Crypto thrives in stable, growing economies. Mm, so here's the key levels, you guys. So look, also my bad, but I also was talking about crypto and Ethereum, how they're gonna start rallying during the weekend, and if they keep on rallying, especially the whole day Sunday, is letting you know the market's gonna open happy. And as you can see, here's Bitcoin 1 hour candle, and starting Friday, we start stabilizing, going up. Not just that, but we also completed that 3 candle box that I mentioned over and over and over this week. So you wouldn't be able to go on a good trade as a day trader and make some good ass money on this easy sweet spot, whether it be with Bitcoin or Ethereum. They fucking both made beautiful fucking moves, and they're gonna keep on pushing it up, especially when the S&P 500 keeps on shoots flies. You're gonna see Bitcoin, Ethereum, especially Ethereum. You're gonna see Ethereum fly. And here's Ethereum. We were somewhere here. Fucking Friday. Look where we were Saturday. I mean Friday. I'm telling you guys. So I think with crypto is that it's synchronized with the actual market. That's why it's so important to follow it over the weekend. But anyways, so here's the key factors that are gonna affect the S&P 500 and the market, any market, both markets in general. Tuesday and Wednesday, you got the Fed meeting. They're probably gonna be keeping rates at the same price. Everybody expecting to for him to say that shit pretty much. But Powell comments about inflation and trade impacts could move the market also. So that's another thing people forget. They just pay attention to what he says, but it's also what the reporters ask. All those fucking questions matter a lot. Um, this week earnings, we got Apple on Wednesday, huge for the market. You got Microsoft on Tuesday, cloud growth number key. Amazon on Thursday, ASW and international sales focus. Meta on Wednesday, less trade impact but still important. Friday we got job report. Could be weak, which might actually be good for stocks if it means Fed stays dovish, meaning positive. The setup is good. Good trade news, good potential earnings, stable Fed policy, bullish for S&P 500. Um, Apple calls individual stocks. Apple calls if gap up less than 3%, room to run. Microsoft steady accumulating. Energy names like XOM, CVX for the Europe energy deal. Risk management. Don't chase the gap up. Wait for pullbacks. Yup. Wait for those pullbacks, people, because those pullbacks will happen. But anyways, that's all, folks. And I'll make a